Hi, good afternoon, everybody. Did you notice that Lorna and I are very well coordinated? Not just in talking about retirement, but in color as well. We're both in pink and black today. That was totally unplanned. All right. So I'm Wei Jin from CPF Board, Retirement Savings Department. So this is an interesting fact. Did you know that all of you, in fact, you have already started saving for your retirement? How so? Well, it's with CPF. So from the very first day that you started work, you have already been saving through your CPF. So today I will share with you how you can use your CPF to formulate a foundation, a solid foundation in your retirement plan. And I'll share with you three key things today. Number one, well, your CPF is your foundation. And number two, how you can optimize and grow your CPF. And thirdly, how these savings that you accumulated can then give you that lifelong income that you want in your retirement. Right, so your CPF, it gives you the foundation by meeting your three basic retirement needs, which is giving you a home, right? Your healthcare needs, and also your retirement income. So with your CPF, you can own a fully paid up home. And like what Lorna has shared, you can also monetize your home to supplement your retirement income through government schemes, or if you're a private homeowner, through DBSs, for example, the equity income loan product. And on the healthcare front, your CPF gives you basic insurance coverage through MediShield Life and CareShield Life. So MediShield Life will help you defray medical expenses, and CareShield Life, you know, in the event of severe disability, it will give you cash payouts for life. Yeah, and last but not least, in retirement, you need a lifelong income to give you that peace of mind. And this is what we're focusing on today, how you can get a lifelong income through your CPF. Right, so as all you all know, right, your CPF savings, they enjoy CPF interest rates. So for those of us who are a bit younger, like myself, below age 55, the government pays you an extra 1% interest on the first $60,000 of your CPF saving. So you enjoy up to 5% on your CPF, and the rest of it will earn 2.5% in the OA and 4% in the special and MediSave account. For older members aged 55 and above, you enjoy even more benefits. The government pays you up to an extra 2%, so you enjoy up to 6% on your CPF savings. So the extra 2% is on the first $30,000 of your savings, and another extra 1% on the next $30,000 of your savings. All right, okay. So other than your working contributions and CPF interest rates, how else then can you grow and optimize your savings? So first, you can make cash top-ups to your special or retirement account, or you can make CPF transfers, or you can top up your MediSave account if you want to stash up more for your healthcare needs. All right, so I mentioned that you can boost your savings through top-ups to the special and retirement account. So if you're below 55, you can stash it up to the prevailing full retirement sum, currently at $192,000. And older members aged 55 and above, you can stash up even more to the enhanced retirement sum at $288. Yeah, so these savings will then give you higher payouts in retirement. So since they are meant to give you higher payouts, do take note that these top-ups then cannot be withdrawn for any other purposes other than for your payouts. Yeah. Okay, so if you're topping up in cash, this year we've revised the policy so you can enjoy higher tax relief of up to $16,000 on your top-ups. $8,000 if you were to top up to yourself, and another $8,000 if you were to top up to your loved ones. And also, we have launched this match retirement saving schemes. So seniors with lower balances, when they make cash top-up, they receive a $1-for-$1 matching from the government up to $600 per year. So if your parents are eligible for this scheme, I would really strongly encourage you to make the top-up for them so that they can receive this matching grant from the government. Free money, right? Top up and get it, Okay. Well, many of us may have many considerations. You may find it that, don't know whether to make such a large top-up at one go. But actually, you may not need to do that. You can think about what's a manageable sum and top up small amounts regularly. So for example, if you were to make top-ups of $50 per month, that alone will give you a sizable amount of $18,000 in 20 years. Yeah, so the key thing is to start early and make the habit regular. Yeah. Well, if you still hesitate, you don't really want to use cash, you could consider this other option of transferring your CPF savings to get higher interest rate. Those members below 55, you can consider transferring your ordinary account savings to the special account to get higher interest, and older members can transfer your special and ordinary account to the retirement account for higher interest. But do take note that as with all top-ups, this is irreversible. So those of you who have ongoing housing commitments or you have housing plans, do plan carefully before you make the top-ups. Yeah. Also, if you would like to help your loved ones, you can also transfer your excess CPF savings to their CPF account to give it a boost. For those of you who are concerned about having more for healthcare expenses, you can consider topping up to your MediSave account up to the prevailing basic healthcare sum of $66,000. So similarly to the retirement top-ups, you can also enjoy tax relief of up to $16,000. So $8K for yourself and $8K for your loved ones. But do take note that the tax relief is shared with the retirement top-up. A bit confusing, right? So let me explain. So example, for this year, if you were to top up, let's say $8,000 to yourself and another $8,000 to your loved ones, you will only enjoy $8,000 of tax relief for the year. Right, so some of you who are quite interested in investing, you feel confident, you would like to do your homework, well, we have the CPF investment scheme where you can invest your OA and SA to grow your monies. But do take note that all with investments do carry risk, so do your homework beforehand, understand what you're buying, your risk appetite, the nature of the product before you make the decision. Else, if not, you can just simply leave it in the OA and SA for a fuss-free way to enjoy risk-free interest rates. Okay, so now that you have grown you know how to grow your CPF savings, you may be wondering, then what happens to this stash of retirement savings? Well, through CPF Life, your retirement savings will then translate into a monthly payout for life for you when you retire. So CPF Life is a national longevity insurance annuity. Very chimai, what does that mean? So, okay, what it does is that it insures you, like what the earlier speakers have shared, prevents you from the risk of running out of retirement savings in your retirement. Yeah, so why is it important? Because none of us are God, right? Even myself, none of us will know how long we live. So it's a little bit, to estimate exactly how much you need to stash away for your retirement. If you save too little, you end up with not enough. You save too much, then you deprive yourself from living the kind of retirement lifestyle that you really desire. But with CPF Life, you're assured that you will never run out of savings, so it gives you that peace of mind. So how does it work? When you turn age 55, the retirement savings that you have accumulated is set aside as a retirement sum in your retirement account, and it will continue to grow with interest. And from age 65 to 70 onwards, you can choose to start your payout anytime and choose a CPF Life plan that best suits you. If you have at least $60,000 in your retirement savings, you will automatically be put into CPF Life. Yeah. And if let's say you have not selected or started your payout age 70, we will automatically start it for you and will automatically place you on the CPF Life Standard Plan. So this is to help you to be able to enjoy your payouts. Yeah, contrary to misconception, right? We don't like to lock up your money. We really want you to enjoy your payouts, to enjoy your retirement. Yeah. Okay, so like I mentioned, there are plans that you can choose from, and we have 3 life plans for you to choose from. And how do you go about deciding which plan to choose? Well, retirement is a very personal choice, so it really depends on the kind of lifestyle that you like. So you can consider how are you going to meet rising costs over the span of 20, 30 years in your retirement, right? So if you're very concerned that costs would go up over time, you can consider the escalating plan. So with the escalating plan, although the payouts may start a little bit lower, you are guaranteed that it will increase by 2% every year. Well, but if on the other hand, you feel that it's okay, I'm willing to spend less, buy less, even though things become more expensive over time, you could consider the standard plan. The payouts a little bit higher, and they remain level over time. The last plan is the basic plan. It's a bit of a legacy feature. The payouts start low and will get progressively lower, and you may be wondering why. Well, it's because when you get your payouts, your retirement savings will get lower, right, because you're depleting it, and because the balances are lower, it earns less extra interest, and thus the payouts would then get progressively lower. Okay, so some of my friends and CPF members have asked me, how does it work? How can it magically provide you payouts for the rest of your life, no matter what? Okay, so this is how it works. When you join CPF Life, your retirement savings are used as your CPF Life premium, and when you start payout, your payouts will be deducted from the premiums. And later on, as you draw it down, when your premium is totally depleted, you will still continue to get the payouts, and it comes from the interest that you and other CPF members have accumulated. So you get the payouts no matter how long you live. Okay, so now you might be wondering, how do I go about, getting these payouts that I want? So first, you can think about the kind of desired retirement lifestyle that you want, how you're going to live it, and do consider that generally prices do increase over time. And with that, you can then have a better idea of which of the CPF Life plans is more suitable for you. Next, think about how much monthly payouts you might need per month to support your lifestyle. And with that, you can then use our CPF Life estimator to work out how much CPF Life premium you need to give you that amount of monthly payout. And thirdly, you can then check whether your retirement savings are enough, to pay that CPF premium for your monthly payouts. If you're still a bit short, you can consider the options that I just shared of cash top-ups or CPF transfer to boost your retirement savings. Okay, so some of you may still have a lot of questions, about, what do I do when I turn age 55 or when I turn age 65? So not to worry, you'll be glad to know that we have these personalized one-on-one guidance services that will share with you personalized options on the decisions that you can make. You receive an invite from us to use this service when you're nearing age 55 and 65, and you can access this service digitally, or if you prefer a face-to-face conversation, you can book an appointment with us with our officers at any CPF service centers. Okay, so I'd like to take an opportunity to share with you that we have an upcoming event, the CPF Board Ready for Life Digital Festival, which is happening on 12th to 13th November, where you can get energized, inspired, and reimagine how your retirement will be like. So do visit our website to sign up for the webinar and workshops, which are free here. Okay, I've come to the end of my sharing today. Thank you for your time, and I hope that we can stay connected, so you can stay connected with us through these channels that we have. Thank you.